What's poppin', investors? It is, what is it, July 13th? And this is the video like takes 30,000 to a million. Not much is popping in my account, unfortunately. Even lost my voice saying that. I'm only up a couple $1,000, but it's a win because I'm doing better than the markets. I think the markets actually finished negative today. So I'm celebrating. Let me see. I'm not because the markets finished negative, but because I'm outperforming. So yeah, minus almost 1% for the markets today. S&P 500 being the markets, and I was up about 1%, so that was almost 1%. Cool. So as usual, I'm gonna go through all the positions, and then I'm gonna go to the investing tab. I'm gonna do relative performance, do the homework, then talk markets for a little bit. All right, so I'm going to scroll through the options real quick, and you can pause your video player at any moment to try to figure out the exact positions. All the information you need or may need is contained within this little box right here. So just pause, take a look, see what I own or don't own or have sold or written, and that will tell you everything. So moving on to the stocks now. Still have 830 shares of Apple, but I am planning on reducing that a little bit. So as a result, I've managed to sell a couple calls to try to get rid of 200 Apple shares. We'll see if I get to hit those two targets, 150 or 152.5 by the end of the week. If we don't hit them, I get to keep my shares. No harm, no foul. Realty income was about flat today. Main Street Capital up 1% almost. Goldman Sachs about flat, down a little. Paramount had a really nice run, but then late in the day kind of corrected a little bit. Not as much as other stocks. Most stocks kind of gave up the entire rally, but Paramount actually kind of held up strong. So strong that what I didn't do much. I had sold a couple puts and I cashed those in and bought them back. So that was like, I don't know, I gained $40, something like that. I'll take it. But I still have this position. I'm probably going to hold on to it for, quite some time until it hits 30. $30,000 position is pretty sizable. All right, what else we got here? Smith & Wesson, bad day, down a couple percent. I actually sold some more puts at the 12.5 level, expiring all the way in, what is that, August 19th, something like that. So that's happening. Hopefully it rallies though, so I can re-roll those $15 calls. So anyway, what else they got? And this is just for kicks, the DD position. All right, next is the account tab. So I'm going to the investing tab. You can see clearly I've actually managed to reduce some margin because I sold some calls and puts. So I'm under 101,000 now, and going downwards since the account is gaining. I'm sitting at about 71.5, 71.7 margin right now. These are the equities sorted by total return, and these are equities sorted by size. So total return, Apple, Realty Income, Main Street Capital. Size, Apple, Goldman Sachs, Main Street Capital. Fair enough. All right, a relative performance. 1 day performance, almost 1%. 1 week performance, about flat. 1 month, 10% gain. Not bad. 3 months, 2% gain to be expected. 1 year in the positive, 3%. So 1, flat, 10, 2, 3. Okay, so everything green more or less. That's good. Whenever I do the all-time chart, I have to disclose that I started investing in 2018 in August, so that's why the chart looks weird. So keep that in mind. So I started investing here. Because you never know. This might be the only video you see, and then if I don't mention that, you won't know. You'll be like, how's this chart like that? It looks weird. Well, it's because all these years there wasn't any money into the account, and that's why I didn't move. So there you go. Explained. All right. Let's compare that to the S&P 500 now. We use SPY as a proxy. I realize it's not optimal, but that's what we're using. So down 1%, 1 week, flat to down, 0.5%. 1 month in the green, 3 months, minus 13%. Bad. 1 year chart, I was up 3%. S&P 500 down almost 13. So I'm outperforming the S&P 500 by more than 15% on the year chart. So I'm happy about that. Good stuff. All right. So I think that's the relative performance. And then what else we got? We're gonna talk markets. So I don't know if you guys have been following this saga here. But it's quite comical actually. So Elon drops his bid, or he's trying to drop his bid for Twitter, and he's creating all kinds of drama on Twitter. Look at this one. Elon Musk, a sloppy idiot. I guess not in that order. On drugs. Trump was bashing Tesla CEO in private long before first public event. Anyway, so that's pretty entertaining. So apparently he doesn't want to buy the company yet, and because I guess he dropped the valuation, but he's quoting some other reasons. So no one really knows like what's going on. But anyways, they're going to court. But more broadly speaking, without getting all into this, apparently it's going to be a bad earnings season, guys. It's going to be a bad earnings season. So this is, our favorite Jamie Dimon. Banks earnings could be ugly, says CNN. Here's what to look for. So Jamie Dimon has been talking down the economy for quite some time yet. He's saying like how there's going to be a hurricane, this and that. There's some other brilliant quotes like non-benign environment and bad outcomes. Those are his descriptions for the upcoming, quarters. So there's a lot of like regular financial professionals that are coming out and saying how the economy is going to be a little bit, the earnings are going to miss. And I actually like to listen to the run-of-the-mill financial professionals, not the ones that are actually very popular and followed, because mostly they're just kind of sensationalists, right? So they're either like perma bears, or they say outlandish things in order to catch attention. Jamie Dimon's kind of well known because he's a bit of a sensationalist. He kind of overplays things. However, just reading through articles and listening to some, people on news networks, financial networks, etc., it seems like they're a bit, bearish on the earnings calls this season. So they're probably right. They're usually right. So even though a lot of this is being like priced in, and markets already know that it's going to be a bad earnings season, I guess it's going to surprise even further to the downside. It's possible. Apparently, energy sector is the only sector really keeping the entire earnings season alive. Like, earnings are expected to be lifted by 200%, over 200%. While things like financials are supposed to move down 22%. Overall, without energy, the entire, U.S. markets are supposed to miss by 2% overall if we exclude energy out of the picture. So it's pretty bleak, but I don't know. I mean, I know that a lot of this is already priced in. Bank stocks are already down like 20-30% off their highs, which is quite a bit. But another thing that's interesting about this whole thing is that how much of those negative earning surprises are factored in. I mean, if analysts say one thing, but then all the financial professionals say that, oh yeah, it's going to miss on the downside, like, hasn't that, it's out there. Everyone, like, people already know there's going to miss on the downside. So I'm wondering, like, how much of that is priced in. I think what's really actually important coming up is just the inflation print. Like, all these earnings surprises not as relevant as what the Fed's going to do when they see the inflation data. There's some bets that the inflation is starting to roll over because commodity prices have really taken it on the chin. So they've been dropping, like a stone, and in some cases, not all of them. And that's kind of indicative of inflation peaking. But normally when inflation peaks, it's kind of a little bit of a sharp drop off. It's not really, just kind of like a slow grind. So I'm a bit confused as to what's going on in the markets personally. Like, I've been investing for about, or it's 2022, maybe over 15 years. And this is a little bit unfamiliar for me. Even like doing backlogs and going back in history, like this is a bit of strange times in the last couple of years. So anyway, I'm just going to do what I'm doing, which is, I'm just selling options, and regardless of what the price is, I'm going to try to deleverage a little bit more, because just in case things get a little heated out in the markets. But in general, I'm not going to change too much. Something that I do want to do is perhaps like take out some insurance though. So I don't normally buy puts. I like to sell them, but I may do like an S&P 500 put, or buy like SH, which is an ETF that tracks the downside of the markets. It's an inverse ETF, exchange traded fund. So I might do that with some money, but I don't know, because I'm actually leveraged and borrowing a lot of money, and I don't want to be paying interest on that, on my insurance. Like, it's just not cool. That's very expensive. So I may risk it a little bit. We'll see. That's why I'm trying to raise cash, but I can't really raise cash like very easily without the stocks having a few up days or a couple up weeks, so I can sell some calls and actually execute some of my trades. So it's been kind of difficult, and I'm happy that I'm managing this environment okay. Like, the fact that I'm beating the markets right now and all the time metrics is kind of encouraging, so I'm happy about that. But I would like to actually grow my account instead of just lose less. I'm growing, but very, very slowly. And on the year, I'm about even. I'm actually like $3,000 down or something like that on the year. And I'm down about 20,000 from the highs of the account. So I would like to actually be going in the other direction, and this market environment is a little bit difficult. So hopefully I can maneuver through it okay, and when things turn up, I don't know when, people are predicting like by winter, things are starting to look up. Maybe China will bail me out. Let's see what it's doing currently in Hong Kong. So Alibaba sitting at 108.2 Hong Kong. So that's probably about 111 or so in US dollars, and it closed at 109. So it's up a couple bucks, I guess, 1% or so in Hong Kong. We'll see what happens in the morning. The futures are looking up. S&P futures are up 10% at the moment, recording at 12:39 a.m. On the 13th. And Dow futures up 0.05. Nasdaq futures up 0.2628. So futures are pointing up. That's not bad. Oil sitting at 96.63. We possibly could have a decent close to the week. I think the market's actually really like tuned into numbers right now. They want to hear data. They want to pick a direction. They're not really sure like which way this thing is going to go. And I'm not sure either. But if you have an opinion on the matter, what you should do is you should let me know and leave a comment below of what you think is going to happen in the markets, because any help will do. Or if you have a clue or a piece of data that I think might be relevant, that will help me a lot. All right, I'm going to end it right here. This has been fun. I'm going to do another update tomorrow, hopefully. And for the rest of the week, on the weekends, I got, I'm going to review more companies. I've been doing like company reviews, little shallow dives. Wow, voice going out 3 times in one video. I've been doing a little shallow dives on different companies that find intriguing, perhaps. So go and check those out. And then also you can leave in the comments like what company you'd like me to review. Maybe you have a company that you're thinking of buying. Maybe you own something but you're not sure, and you want like a second opinion on the company. I'll look at the numbers, like graphs, all kinds of cool things, and I post it on the weekends. So yeah, let me know. All right, that'll be it. Peace out.